Almost every trader has added a MACD indicator to their chart at least once, but trying to use MACD without understanding it can lead to poor results. However, I have a secret MACD formula that I'll share with you. This strategy works with every pair and every time frame. Now, I will share my secret trading strategy with you. So, if you want to maximize your gains and minimize risks, you've come to the right place. Welcome to Trading Hive, and without further ado, let me give you a brief overview of MACD. Disclaimer: the information provided in this video is for educational purposes only, and should not be considered as financial advice. Most of the people watching this video probably already know what MACD is, but for those who don't, let me summarize it briefly. This is MACD. At first glance, it may seem complicated, but it's actually straightforward. We just need to understand its components. The blue line you see is the MACD line, and the orange line is the signal line. The middle part is the histogram, which represents the difference between the MACD line and the signal line. The wider the distance between the MACD line and the signal line, the bigger the histogram bars become. The flat line in the middle of the histogram is called the zero line, which basically represents the center of the MACD indicator. Enough of that boring bullshit. Let me show you the strategy. To use the MACD indicator, open the trading view. Click on Indicators located in the top left corner. In the search bar that appears, type MACD and click on the first result that appears. And boom! Here is MACD. Here's how our strategy works. If we are looking for a buy signal, the MACD line should cross above the signal line below the zero line. If they cross and it's above the signal line, you wouldn't want to enter the trade. For example, this represents a bullish signal. The MACD line crossing above the signal line, below the zero line. This could be a good point to enter the trade. Conversely, if we are looking for a sell signal, we need MACD line crossing below the signal line, above the zero line. This indicates a bearish signal, as you can see here. Let me show you an example. For instance, in this chart, the MACD line crossing above the signal line, below the zero line. This gave us a buy signal according to the MACD. So we are going to open a long position. And yes, we made money. But, if you use MACD alone, you will probably lose money. MACD is not very reliable when used alone. For example, it may give a strong bullish signal, but the price keeps going down. It works better in trending markets, where it is less likely to give false signals. So, using MACD in a clear trend can help prevent losses. To determine if we are in a trending market, we add another indicator. We are going to use 200 days exponential moving average to identify the trend. Click on Indicators in the top left corner and type EMA in the search bar. Select the first result that appears. And here it is. The line that appears in the middle of the chart is the EMA. Before explaining its purpose, we need to adjust its settings. Click on the settings icon next to EMA, then click on the Input section and change the length to 200. Save and close the window after making this adjustment. So, here is how you use MACD and EMA together. First, let's look at the EMA line we added earlier to determine if the market is in a trend or not. If the price is above the EMA line, as it is in this case, it indicates an uptrend. Conversely, if the price is below the EMA line, as shown here, it indicates a downtrend. So, when we observe a bullish signal in the MACD indicator and the price is also above the EMA line, it provides us with a very strong buying signal. For example, here the price is above the EMA line, and the MACD is giving a buying signal. We will open a long position from here. I will set my stop loss just below the EMA line. And we made money again. When EMA and MACD indicators are used together, they can be very powerful. However, it's important to remember that indicators are not magical money printing tools, and risking funds that we cannot afford to lose in day trading can lead to significant financial losses. As a reminder, nothing in this video should be considered as investment advice. Thanks for watching.